So today we didn't have the best of days for Tesla stock, but in this video we're going to go ahead and break down what are some things that we're seeing with the overall markets as well as the economy, and really just tie it back to what we could start to expect to see for Tesla stock as we move closer to its earnings report. Now, we started off the day receiving the PPI, which is the Producer Price Index, and I shared with the Push and Profit Private Group moments after it came out that in September the prices for the PPI actually increased by 0.5% from the previous month, which is actually more than what was estimated, which was around 0.3%. Now, the Producer Price Index is often a leading indicator for inflation, and so seeing this come in a bit hotter wasn't the best of news to start off the day for the markets. In fact, if we take a look at the S&P 500, we see that the first half of the trading session really wasn't that great. But if you actually notice, we still see the overall S&P 500 closing higher than the day prior, despite it only being a minuscule amount. And so that still leaves me with the idea that October, that I've been calling Uptober, is still actually on. Now, if we actually take a closer look to the overall S&P 500, but look at it from a weekly time frame, we could see that recently we had a spike in volume relative to time, and it's one of the highest that we've had since June 16th. Now, if we actually look, June 16th, we saw the markets push upwards, and more recently when we had this new volume spike, we see the markets kind of pushing upwards with this little wick at the end of the bottom of this candle, highlighting that buyers are stepping in, which again aligns with what I've been telling the Push and Profit Private Group about a temporary relief for the markets in October. Now, today we also had the Fed meetings for the month of September, which is basically just a transcript or pretty much a summary of what was said from these Federal Reserve policymakers during the last decision on monetary policy. Now, if you look online, you see a lot of individuals pointing out to the section on page 8, which kind of seems a little doom and gloomy. And that's because the snippet over here says that a majority of participants judged that one more increase in the target federal funds rate at a future meeting will likely be appropriate, while some judge it's likely that no further increases would be warranted. All participants agreed that the committee was in a position to proceed carefully and that policy decisions at every meeting would continue to be based on the totality of incoming information and its implications for the economic outlook as well as the balance of risk. And so this could seem pretty hawkish or pessimistic about the idea of what's going to happen with monetary policy, but if you actually parse through the meeting minutes and you look further on page 8, I want to highlight this section right over here, which says that many participants commented that even though economic activity had been resilient and the labor market had remained strong, there continued to be downside risks to economic activity and upside risks to the unemployment rate. Such risks include larger than anticipated lagged macroeconomic effects from the tightening in monetary or financial conditions. Now, I also forgot to highlight the bottom over here, but it says participants generally noted that it was important to balance the risk of tightening against the risk of insufficient tightening. Now, this language over here just indicates that the Federal Reserve is aware that they may be, hiking too aggressively if they do one more hike, and they run the risk of breaking something in the economy. And this is why I've been saying that, for the next meeting, which is November 1st, it's unlikely that they are going to hike again. But I want us to really just look at the sentence over here. Such risks included larger than anticipated lagged macroeconomic effects. Now, we all know that it takes time for the previous rate hikes to actually run through the economy, but they're pretty much saying that, hey, this time it may actually run in a bit slower, and we believe that in the future going forward, unemployment might actually rise, which is something that they're looking for. They want unemployment to just tick up a little bit. This way they could find that equilibrium between price stability, unemployment, and just figure out what to do to make sure that the economy doesn't get worse. And so, as I've shared in the past, this upcoming CPI report is going to be huge in swaying the decision for monetary policy. Now, earlier today in the Push and Profit Private Group, I shared some estimates for the CPI where we have Goldman Sachs saying 3.6, Barclays 3.6, Bloomberg, JP Morgan, Morgan Stanley, Wells Fargo, Visa, TD, pretty much everyone is saying 3.6%. And so essentially, if we have inflation come in cooler than this, then this is going to be huge and majorly bullish for the overall markets. And of course, Tesla is going to push up alongside with the overall markets as well if we have inflation come in a bit cooler than expected. Now, if it comes in hotter than expected, kind of like what we saw with the PPI report, well, then things may get a little bit tricky. But of course, one of the main factors that is going to influence the overall price direction for Tesla towards the end of the month is going to be the earnings report as well as the forward earnings guidance. Now, I want to go ahead and hop into my laptop to really just talk about some price levels and just look at Tesla stock from a technical perspective. But before we actually do that, I want to just show this article over here, which is just utter nonsense. So there's this article right over here that shows that Tesla bear Gordon Johnson shares stories of 3 drivers who don't plan to buy a Tesla again. Now, if you guys don't know, Gordon Johnson is one of the biggest bears for Tesla and has been bearish on Tesla for like the last 8 years and has been wrong pretty much every single year, with the exception of 2022 when we pretty much saw the stock market capitulate. But pretty much every time he's been wrong about Tesla. Now, this article is saying that he randomly just asked random Tesla owners of what they thought of Teslas and will they buy a future one. And basically, he's saying that his anecdotal stories, just because 3 people said that they wouldn't pretty much buy a Tesla going forward, that this means that Teslas are bad and most people don't want to buy a Tesla. Now, we have to understand this is anecdotal and this isn't something that's factual. You have to look at a bigger data set of just a population or a survey to really get a true picture. And when I've showed previous surveys or polls on this channel showing that there's a loyal customer base for Teslas, where many Tesla owners have bought a Tesla and look forward to buying another Tesla soon when they have to. And so, this anecdotal idea that 3 people said that they wouldn't buy a Tesla is just complete FUD. I mean, if I go to the middle of the street, right? Could be any street in America, and I hand out a brand new wrapped iPhone, I guarantee you there is going to be one individual who, despite it being a brand new iPhone that they could keep for themselves or even sell, they're going to tell me, no, I don't want it. Now, I can't run back to the media and tell the media, oh man, people don't want Apple iPhones because they're terrible. No, right? That's just one person. And so I want us to be mindful of when we read these headlines and these articles that sometimes you have to kind of really understand the data and understand that some people try to lie with data by giving you these small, portions of anecdotal stories of where it's not really based on a good survey or a good poll. But with that said, as I said, let's go ahead and hop into my laptop and actually take a look into some price action with Tesla. Alrighty, so we are officially in my laptop taking a look at Tesla stock, and as I mentioned in the beginning of this video, it wasn't the greatest of days for Tesla stock. We see that Tesla stock came downwards, but I want to provide a reminder that this wasn't necessarily the worst of days either. If we actually just look, Tesla closed slightly lower than the close of yesterday. That's not terrible. And if actually we go back, one thing we have to understand is, yes, even if Tesla stock is pushing upwards, it's in this mini upward trend, as I've been calling October for a while, it doesn't necessarily mean that every day we just go straight up. I mean, we've been fortunate with having Tesla kind of push up the day prior in the beginning of the trading session. Then the day before that, we saw Tesla stock kind of push up towards the middle of the day. The day before that, we saw Tesla kind of push up. It did, come down in the after hours. But again, pretty much these waves up. But I want to provide a reminder that we do have these days where things don't move up or down that bad. That we have these sideways type of days where we close relatively at the same area where we were prior. Yeah, we swing down, we swing up, or we swing up and swing down, whatever you want to say, right? But it's relatively at a steady level. So I don't think that, look at this, another day up. So we've been pushing upwards. If we kind of just pull back a little for October, let's actually go back, right? But you can't expect Tesla to just go straight up. I mean, I wish that were the case. We're probably not going to see that happen as strong as we did back, let's go right over here, right? I'm sure you can't even recognize this area over here. This was the pandemic, if you guys don't know, right? And we saw pretty much Tesla as well as the overall markets just push up aggressively. We had just major days up, but of course this was a combination of monetary policy, fiscal policy. I mean, it was just insane, and maybe one day, but not in the same environment that we were before, right? But Let's go ahead and take a look at the S&P 500 index, right? So we actually see that it is still pushing upwards. And again, Tesla stock is an individual stock, but it is a beta leader, and so it tends to follow the markets. And one thing that we see is that there's just a gap over here when we look at the daily time frame for SPX, and it's likely that it's gonna get filled. It looks like the overall markets are pushing up, and so that's why I still believe that things are still looking optimistic for Tesla. Of course, the main driver, as I said a little bit earlier, is going to be earnings, which we'll go ahead and kind of talk about. I'll definitely give you guys an update when it does come out. But I also want to highlight what I saw over here on X.com from Gary Black, right? So we have Troy Tesla say that Model S and X sales dropped from 19,225 in Q2 to 15,985 in Q3, despite big price cuts. And then so we have Gary Black, who I've shared on the channel before. He's a fund manager, a big Tesla bull, and he's been very vocal that Tesla needs to advertise. In fact, he said, despite huge pullback by Tesla Uber bulls, eager to agree with Elon Musk on no advertising, silent majority still favors some advertising over further price cuts, at least on Model S and X. Now, I remember I talked about this in a previous video about, hey, he does have a point, because we have a lot of other vehicle companies that aren't doing these price cuts, and they're still holding up with demand, versus Tesla is not getting like this giant boost of demand. And I do disagree in the sense the price cuts do help, but at the end of the day, I firmly believe that Tesla can do a lot more to start advertising, because there's a lot of, I see it in the comment section all the time, there's a lot of individuals who say that they themselves who own a Tesla now didn't know the features that Tesla offered, or some of the specs, or they know people talking about stories from years ago, just like Gordon Ramsay, the bear. Or I said Gordon Ramsay, that's the chef. Gordon Johnson, the big Tesla bear. Sometimes he says things that is like 10 years old. Like, it's like, what? Tesla definitely improved on that. You're looking at old articles from Wall Street Journal that are so old. Look at these new articles. Look what Tesla's doing. Look at just look at the live stream that Elon Musk did just a few months ago with the update on FSD. So, there's a lack of advertising that, yeah, Tesla has this huge demand with Elon Musk, but I still think that some capital can be put into play to go ahead and really just showcase Tesla. But as I said, Q3 is going to be the Q3 earnings is going to be something we want to pay attention to. I believe that Tesla can go up before the earnings to this area right over here at around like 275-ish, which we're actually pretty close. Let's actually kind of zoom back. We're actually pretty close from where I think Tesla can go before the earnings, but I think after that point, everything is just going to lead into the fundamentals, because yes, you could look at the charts, you could look at the macroeconomic data, you could look at alternative data, you could look at so many different data points, but one of the strongest pieces of data, and it's often the hardest to really understand, is fundamental data. Everyone could look at their charts and draw squiggly lines. It's not that difficult. Technical analysis is one of the easiest types of analysis that many investors and traders can understand. But fundamentals is a lot deeper. There's a lot more nuance to it, but it's also one of the most reliable ideas when it comes to pretty much analyzing a stock. And so the Q3 earnings is going to be something that I've been saying is we're most likely going to be disappointed because of what Elon Musk foreshadowed in the previous earnings call. But earnings are very nuanced, right? It's not just the numbers that come out, but it's also the forward guidance. So if we have Elon Musk on this next earnings call mention, I think if he even talks about anything about the Cybertruck, that's going to be huge for Tesla, right? If he says anything like positive about that, and also just having like a positive outlook for the fourth quarter and also for the next year. I think really all the pain is going to be starting to wipe away as we enter the second half of the year. And let me actually correct myself on that. I believe more pain is going to happen in 2024, right, economically, but towards the end of 2024, that's where I actually see the real bottom for markets. That's where many economists have been saying, especially the ones from Wells Fargo. A lot of them have been saying, hey, the third quarter of 2024, that's probably where we start to see the pain end. And that's probably where you're going to want to go long on Tesla even harder, right? Of course, I've been investing on Tesla since 2017. And if Tesla does come down for its earnings report and we don't hear anything positive from the forward guidance, then I'll be fine. I'll be fine. I'll go ahead and I'll just wait for more selling to take place, and I'll let you guys know when I see that idea of confirmation of an uptrend coming back, and I'll add into my long-term portfolio, and I'll probably do some trades going long. But if we do get rejected, yeah, I'll short Tesla as well in my short-term trading account, just to hedge the pain in my long-term. But I'm honestly not too concerned with Tesla. I think this was a rough quarter, Q3. But we know that there were updates to the gigapresses, and that's going to help Tesla actually be able to produce more vehicles. And there's this Wright's law, right, where the more you produce, you kind of double in efficiency. And so I believe that Tesla is going to just have still this leading edge against a lot of these other, EV companies, or even all these auto legacy companies trying to jump into the EV space. And so if you're looking at things from the long term, which you should be if you're an investor, you shouldn't be too concerned of where we're currently at, especially if you're looking at the numbers and you're seeing what's going on. I mean, we're seeing EV trends continue to build year over year, and I don't expect that trend to go away, especially when we see currently in this, current environment right now, we're hearing about volatility in oil due to what's going on in the Middle East, which I actually touched on a little bit more with the Push and Profit private group. But this just kind of leads us to believe that, hey, more individuals are wanting to not have to be reliant on what their travel destination should be based on gas prices. And you see typically or historically when gas prices average like $5 or $6 in the nation, right, that people travel less, and people don't want to be restricted or limited to that. So right now the challenge with EVs is, yes, there is somewhat of a challenge because of a limited amount of charging stations, but as that actually gets better over time, I think more and more individuals are going to want to transition to the next generational vehicle, which are going to be EV vehicles. And guess who's positioned best to go ahead and benefit for that? Tesla. And so I'm bullish for Tesla in the long term. Yes, I talk about Tesla in the short term, and even I sometimes come across as a bear myself when I'm talking about Tesla, just when we're seeing it get rejected, or I talk negatively about Tesla. But long term, still bullish on Tesla. But you guys let me know in the comment section below, what are your predictions for Q3? I think that we're going to see other revenues actually increase, and I think we're going to see that continue to go up as we go into 2024, 2025, 2026, where we see more and more of these companies actually start to use Tesla's supercharging network, and that's just going to ultimately benefit Tesla. And so again, maybe disappointed for this quarter, but I'm still optimistic. But you guys let me know what your thoughts are for Tesla. And with that said, before you guys go, make sure to watch this next video right over here, and I'll see you guys on that next video. Take care, guys.